Hello, guys. Welcome to Bulls and Bears Academy, and we're here with the weekly analysis for DXY and gold values. So we're going to start over with the US dollar first, and then we'll head over to the gold. Interesting things going on this week. If you look at the upcoming data, FOMC meeting is due on Wednesday, and there are a few more other important data is going to come, which will have a direct impact on the stock prices and obviously on the dollar as well as the gold. The most important thing, the pressing factor right now that we're looking at, that is the Delta variant and how that is going to have an impact on the market. So we're going to divide the whole movement of the market into two phases. The first one being where we're looking at how the market is going to be impacted by uh, impacted in the first 2 days by the Delta variant and how things going to move forward. And once the data starts, the important data that we're looking at starts getting published, how that has an impact on the our stock market. And interesting things to look at. We'll start with the dollar. Now, we're expecting the dollar. It's been in a strong uptrend, and one of the factors that we look at is that we have been having a very strong pullback on the 10 years treasury bond yields. And if you look at that one, I'm expecting the values to be rising up to all the way this week, coming to my target is around 1.53. That's what we're looking at for the yields. Now, having said that, this is where the Feds get involved, and all that we're looking at is that there's going to be a drop in the first 2 days, but then eventually it's going to bounce back, and then it might end the week at somewhere around at 1.499 or 1.53. And that being said, we're going to have our dollar, the DXY, is going to show the same movement, similar movement in that case. And if I pull out the 4-hour chart, we're looking at the DXY closing around at 92.920, 906. It's going to be dropping down. The max is going to drop down not just at the resistance level. It might have a slight movement below that to the levels of 92.600, and then it would kind of like be there for some time consolidating, I would say, rather. And whenever it makes a move, a breakout, it's going to be towards a further continuation of the bullish trend, and we're looking at it as somewhere around ending the week close to 93.340. That's what I'll be looking at for the dollar. Now, coming to the gold, I am going to give the reasoning. If you look at the previous day analysis, my expectation was that it will break out of the consolidation, and then from there it might break actually the support level of 1790 and drop down to at least 1782. But that did not happen, and then it got a strong rejection back on back, and it went the last candle the day we see it closed at around 1801. Now, having said that, again, as we talked about the movement of the gold prices after this period of consolidation over here, now we're expecting a breakout either in either direction, and you can see the analysis through. I'm seeing that people are posting that it's going to break out to the top, it's going to break out to the low. We need to understand one thing. In a long run, yes, we do expect the gold to be continuing its bullish momentum. But as of now, before that happens, we definitely I'm pretty sure about that, that we're just going to see the lows, and that would be somewhere around 1777 to 1764. That's where we're looking at. And if you see the first movement, our first target would be 1836, and the main reason contributing to this thing would be the Delta variant and the concerns that are there in the stock market. Uh, at the same time, having said that, it's not really going to go much on this side, because the investors right now are kind of confused. They're not very certain about the movement of the stock market, and that's why if you see this entire confusion in the state where they're not certain about their trades, is basically because they're not sure about where the market moves. And one of the reasons is that we're not sure how soon the tapering is coming, and we're not sure how soon the Feds are going to raise the interest rates. And because of that, the bonds are not appearing as lucrative right now to the investors, and they're waiting, holding on to see. Because one thing is for sure, I'm also thinking about it, that it's sooner than we thought the interest rates are going to be increased. And we've already seen the Feds talking about the interest rates coming around as early as 2023. But between that period, we're looking at there will be at least two increases in the dollar price, sorry, the interest rate. And that is one of the reasons there's a lot of uncertainty about that, whether what are the Feds going to do, whether it's going to be easing of the quantitative easing is going to be there, or whether it's like, and how exactly are things going to happen, whether they're going to slow down the asset purchase, or is there anything else, that what exactly would their move be in that case. So if whatever scenario that happens, that would kind of result in the gold dropping down to the lows of 1764. That's what one of the main reasons we're looking at, is because of that thing happening. So right now, the rise, that tomorrow when the market opens, we're looking at for the first 2 days, that's Monday and Tuesday, until the US market opens, I'm hoping and I'm looking at the prices reaching to the top as high as 1836, being said that because of the Delta variant. And once we have, so at the time of the data being released and the FOMC meeting, and the that would rather be on Wednesday, or you could expect that by Tuesday US session, or by Wednesday max, we could see actually a very significant drop, a drop of gold to as low as 1764, or if not 1764, at least 1770s area, 1777. And then at this point, that's a strong demand zone as well. And also, if you look at it, this region has been working as a very strong support in quite a long run for the gold. It has made a couple of times, it has made those points over here. That's like bounce back from here, bounce back from here earlier, if you see over here. So this particular area has been serving as a very strong support. And this also happens to be a very strong demand zone. So I'm assuming a lot of buys are going to happen from there. And that buy, I would suggest that, because once it goes up over here from here, I'm not expecting the gold coming back to 80, below 1800s sometime in the near future. So because of that, I'm advising one thing to people that follow me, or I work with, or anyone who listens to me, that please do not leave any sell open in this area. If at all you have to buy, your buy is going to get covered up soon, but don't take any short position in the 1700s below the 1790 area. So if you're going to open your cells, you would rather be taking a short position at the rejection from 1836 area, and then keep it with you, at least keep your positions open, hold it until you hit the area of 1780s. And do not open, please, again I repeat, do not open any cells in the 1700s area. And buys, even if you buy here around at 1780s, or you buy at 1770s, your buy is going to turn positive very soon. So do not take that unnecessary risk of opening a short position for a period of time, like let's say a couple of days. because that might actually turn out to be big losses. Now that is it from our side. Trade safely, guys, and I wish you a wonderful week ahead, and I hope you guys make good profits on this one. Thank you so much, and you have a lovely week ahead. That's all from Bulls and Bears. For more details and daily analysis, you can head out to our Facebook page as well as the Twitter accounts. And the same time, we'll be posting our daily analysis on the Trading View and YouTube video as well. Stay connected, guys, and stay safe.